Welcome, CA aspirants. Today, we're going to dive deep into the world of corporate finance, moving way beyond the basics you already know. We'll be using your ICAI material as our guide to explore some of the more advanced and, frankly, pretty innovative ways companies fund their growth.
Right, I've studied the basics, but when you open the textbook, it just lists so many other financing types, it's kind of hard to figure out where to even begin to understand them all.
That's an excellent question, and we're going to tackle it systematically. Okay, let's dive into this. Here's our roadmap for today's explainer. We'll kick off with specialized domestic financing, then decode the world of bonds, tap into global capital, and finally, look at the new age of funding.
First up, let's look at some of the unique financing sources available right here in India. These are the kinds of tools that can really make a difference for both brand new entrepreneurs and established companies.
So, is this for brand new entrepreneurs who have a great idea but basically no money? Precisely. It's designed to provide that initial seed funding that helps turn an innovative idea into a viable business.
And why would a promoter provide this instead of just putting in more equity? Well, it's a clever way to inject funds without diluting their ownership. Plus, this debt is often subordinate to what the banks lend, which actually makes the big institutions more comfortable lending money themselves.
You know, this is absolutely crucial for established companies that are looking to expand. It lets them get the big-ticket capital assets they need now without a massive upfront cash payment. It's a real game changer.
Okay, let's move on to bonds. The textbook lists so many of them, and honestly, some sound very, very similar. How do we even begin to tell them apart?
Let's compare two common ones. Now, what's really interesting here is that while they operate on a very similar principle, buy at a discount, redeem at face value, the terminology is distinct. A deep discount bond is really just a specific flavor of a zero-coupon bond.
This slide brilliantly illustrates how bonds are designed to manage different types of market risk. See, inflation bonds are all about protecting the investor, but floating rate bonds, they're designed to protect the issuer from market volatility. It's all about who you're trying to shield from risk.
Junk bonds. It just sounds so risky, doesn't it? Why would an investor even choose these? Well, it's the classic high-risk, high-reward scenario. The potential return is much higher, so some investors are willing to take on that extra risk.
So, we've covered a bunch of domestic options, but how do the big Indian companies raise money overseas?
They use several different instruments to do that. For our purposes, and especially for your exams, we're going to focus in on depository receipts. They're a really important tool. Okay, so the crucial point here is the market where they're traded. The A in ADRs is for American. These are for listing in the US. The G in GDRs is for global, and they're typically for European exchanges, like London or Luxembourg. Simple as that.
So Infosys was a true pioneer in this space. That's a great example to remember. Their move really opened the doors for others.
Exactly. Now, let's move on to our final section and see how financing is evolving with modern technology and, changing social values. This is something we see a lot online, right? But how does it actually work in a more formal sense?
Well, there are three key parties involved. You've got the fundraiser with the big idea, the platform that acts as the trusted mediator, and of course the funders, the crowd, who actually contribute the money.
And what about ESG? That term is mentioned everywhere now. How does that fit in? Okay, as a future CA, this is a critically important area. ESG bonds are all about channeling funds into projects that have a real, positive environmental or social impact. And it's important to know the three main types: green bonds, social bonds, and sustainability-linked bonds.
And this isn't just theory. It's really happening in India. This move by the Ghaziabad Municipal Corporation is a landmark case. It's a fantastic example of green financing right at the municipal level.
Wow, we have covered a lot of ground. The big takeaway is that financing is absolutely not a one-size-fits-all solution. So as you prepare for your exams, really think about why a company would choose one instrument over another. Keep studying, and we'll see you in the next explainer.